Hello everyone and welcome to this video about the basics of personal finance. In this video, we'll be discussing the three most important aspects of personal finance: budgeting, saving, and managing debt. These are the foundation of a healthy financial life, and by mastering these skills, you'll be able to take control of your money and reach your financial goals. Budgeting. Let's start with budgeting. Budgeting is the process of creating a plan for your money. It involves tracking your income and expenses and making sure that you're spending less than you earn. Budgeting is essential because it allows you to see where your money is going and make informed decisions about your finances. To create a budget, you'll need to follow these steps. Identify your income sources. This could be your salary, freelance work, or any other source of income. Write down the amount of money you receive each month. Track your expenses. Keep track of every penny you spend for at least a month. This will give you a good understanding of your spending habits and where your money is going. Categorize your expenses. Divide your expenses into categories, such as housing, food, transportation, and entertainment. This will make it easier to see where your money is going. Set financial goals. Decide what you want to achieve with your budget. This could be paying off debt, saving for a down payment on a house, or building an emergency fund. Adjust your budget as needed. Your budget is a living document, and you'll need to adjust it as your income and expenses change. Review your budget regularly and make changes as needed. Budgeting can be challenging, but by following these steps, you'll be able to create a budget that works for you. Some common budgeting challenges include overspending, not tracking expenses accurately, and failing to adjust the budget as needed. To overcome these challenges, consider using a budgeting app, setting up automatic savings, and reviewing your budget regularly. Saving. The next aspect of personal finance is saving. Saving is the process of putting money aside for a rainy day. It's important to have an emergency fund in case of unexpected expenses, such as a medical emergency or a job loss. There are several types of savings accounts, including Emergency Fund. This is a separate account that you use for unexpected expenses. You should aim to have at least 3 to 6 months' worth of expenses in your emergency fund. Retirement account. A retirement account, such as an IRA or 401k, is used to save for your retirement years. The earlier you start saving, the more time your money has to grow. High-yield savings account. A high-yield savings account pays a higher interest rate than a regular savings account, which means your money will grow faster. To save money effectively, you should automate your savings. Set up automatic transfers from your checking account to your savings account each month. This will make saving a habit and ensure that you're putting money aside regularly. Create a savings plan. Decide how much you want to save each month and make it a priority in your budget. Cut unnecessary expenses. Look for ways to reduce your spending, such as cutting back on eating out or canceling subscription services you don't use. Increase your income. Consider ways to increase your income, such as taking on a side job or freelance work. Managing debt. The final aspect of personal finance is managing debt. Debt is when you owe money to someone else, such as a credit card company, bank, or a lender. While debt can be useful, it's important to manage it effectively to avoid falling into financial trouble. There are two types of debt, good debt and bad debt. Good debt is debt that helps you build wealth, such as a mortgage on a property that will appreciate in value. Bad debt is debt that doesn't provide a financial benefit, such as credit card debt or high-interest loans. To manage debt effectively, you should prioritize paying off high-interest debt. High-interest debt can quickly get out of hand, so it's important to pay it off as soon as possible. Make a debt repayment plan, decide how much you can afford to pay each month and allocate that amount towards paying off debt. Consider debt consolidation. If you have multiple debts with different interest rates, consider consolidating your debt into one loan with a lower interest rate. Avoid taking on new debt. Try to avoid taking on new debt while you're paying off existing debt. If you do need to take on new debt, make sure you understand the terms and interest rates. Use credit wisely. Use credit wisely by paying your bills on time, keeping your credit utilization low, and only applying for credit when you need it. Conclusion. In conclusion, budgeting, saving, and managing debt are the three most important aspects of personal finance. By mastering these skills, you'll be able to take control of your money and reach your financial goals. If you need help with budgeting, saving, or managing debt, consider speaking with a financial advisor or taking a financial education course. Thank you for watching, and I hope this video has been helpful.